Look at this chart, which shows the projected debt to GDP ratio. The US debt pile is set to keep growing for decades ahead. That would continue to erode trust in the US government and undermine the view that treasuries are risk free. But what if the government figures out its debt problem and manages to reduce the debt to GDP ratio? This would be bearish for gold. To do this, the US government would need to make significant reforms to its budget, increasing revenue by quite a lot and/or reducing its spending. Both are possible, but each presents some difficult challenges. Raising more money for the government would involve some form of tax increase. President Trump has instead promised to lower taxes or eliminate income tax altogether. That would saddle the government with bigger deficits and more debt unless it was offset in some other way. The current plan is to replace income tax with tariffs, and these are already rolling out in a big way. But there's no realistic scenario where tariffs raise more than around $400 billion a year. That's far short of the $2 trillion needed to replace income taxes, likely increasing deficits. Reducing spending is another option to reduce the debt burden, but budget cuts are politically fraught and tend to take a long time to enact because many of them have to pass through Congress. As head of the Department of Government Efficiency, Elon Musk set the lofty goal of cutting $2 trillion from the government budget. But after trying for a few months, he reduced that goal by 85% to $150 billion. This goes to show how tough it is to reduce debt. All of this means that in the long term, investors could continue to consider gold as an asset to protect their portfolio from excessive government spending.